Hello guys, welcome to my YouTube channel once again. Alright, so in this video we are going to be talking about imbalances, right? So how to identify imbalance and then how to use imbalance in your trading, how it can help you in your trading. Now when it comes to my method of trading, I use imbalance a lot because when it comes to the forex market, we know that once price is moving, we expect price to be what? To be balanced. Okay, so if price is moving in a bullish trend, we expect price to what? To be balanced. If price is moving in a what? It's moving in a bearish trend, we expect price to be what? To be balanced. All right, so let's just go to the chart and see what we are looking at, right? Let's see how we are going to what? Deal with the imbalance, how to understand it, and then how to use it or apply it in what? Our trade. All right, so right here I have, I think, three images, okay, three diagrams here. Now with the first one, the first two images, what they represent, what imbalance, what price. But then with the what the last one here, it's what represents what balance price. Now why is this one an imbalance what price? Okay, so let's say we have a candlestick movement. Let's say this market is bearish. Okay, that's the example I give the bearish example. Now once price is moving, okay, we don't expect to have what gaps, okay, or spaces in between what the candlesticks that are what are formed. Okay, so once we are having this kind of spaces in between, then we say what price is not what, it's not balanced, because for price to be what, to be balanced, we don't expect to what have any form of what space. So when you look right here, we don't have any space here. Nah, there is no space in between. So with this kind of price movement, price is what is very balanced, and then with this kind of price movement, price is not what balanced. Same thing compared to what, to this kind of what movement. All right, now which time frame, most of the time you'll be like, which time frame is best to look at what, at these imbalances? When you are a daily intraday trader, now your best time frame you can look at is what, is the daily time frame. But then when you are a swing trader, you can actually what, start from the what, the weekly time frame to look for what, imbalances. So once you go into the market, when you're looking for intraday setup, ask yourself, today is what, which day, and then where do we have imbalance? So imbalance is actually what tells us what, where price is potentially going to move. Okay, because since we are expecting price to fill that imbalance before it moves, that means we'll be expecting price to what, actually what, move towards that place where there is what, there is an imbalance before it's what gives us a particular movement. Now for the movement of price, we can easily have price what, moving up again to fill this imbalance before what, we continue, right? Or we can have what, price moving just to what, fill this imbalance before you continue. But then with the filling of the imbalance, most at times you don't get price what, filling the imbalance, I mean fully. You don't have price filling the imbalance what, fully. So most of the time when you are having what, an imbalance, let me just take this image here. So most of the time when you're having an imbalance, this is what we have. So once we are having an imbalance, we what, we look for what, price to trade what, into 50% of this particular imbalance. So let's say we have the imbalance from here, right here to here. So the gap here is the what, is the imbalance. The gap here is the imbalance. Let me draw it well, sorry for that. Good. So once we have this imbalance, you can take the 50% of it. That means you are expecting price to trade what, at least 50% of this particular imbalance and give us that particular drop. So sometimes you have market just what, trading into 50%. That's right on the white line there, right? Let me just use a red line to show it. So price will trade right into it, and then after you get that particular what, rejection into to continue the movements of what, of price. Most of the times you get this, and then later you get price coming in to fully fill it to trade into, let's say, a supply or a demand depending on the direction of the market, and give us that particular move in our direction. So yeah, so when price is moving, price tends to what, actually move towards what, areas of what, imbalance to fill it, and then what, continue moving in the actual direction it's supposed to move. So when you are having an intraday setup, or let's say today we have a Monday candlestick, Tuesday candlestick, Wednesday candlestick, all you need to do is what? Most of the time we have what? Price what? Coming into this particular place to fill the imbalance, and then we get a drop. Now the fact that we are looking for imbalance in the market doesn't mean necessary like price is supposed to come here always. If this is your Monday candlestick, Tuesday, Wednesday, Thursday can easily what? Give you a candlestick like this, so it can easily continue moving, and then later in the future we can have price what? Coming in to fill this imbalance. So the fact that you are also having an imbalance today doesn't mean tomorrow the imbalance is supposed to be what? It's supposed to be filled. All right, let's continue. All right, so let's go to the chart and see how we can what? Apply this theory of imbalance in the market. All right, so let me just clear this. Let's go to the market and then see if we can find some imbalances in the market. All right, so this is the monthly time frame, and then let's start from the monthly time frame. Let's see. So I'm going to start from here. Basically, I'm going to start from here. Now, when price was from here to this side, right? So when you can see, what you can see is right, price moving from here to here. Once price was moving from here to here, we can see that price was very, very what? Bullish. And we can see lots and lots of what? Imbalance in the market, right? You can see that price was gave an imbalance right here. There was an imbalance right here. There was another imbalance right here. There was another one right here. Another one right here. Another one right here. There was an imbalance right here. In fact, lots and lots of imbalance in the market, right? Now, when you look very closely, when you look very closely, you can see that once price formed this imbalance, we had price taking longer time to even come and fill this imbalance on the market, a higher time frame. After price filled the imbalance, what did price do? Price gave us a push to the upside small to fill the imbalance that we had right here, right? So once price was moving down, yeah, we had some form of imbalance that was filled. So we had an imbalance that was filled from here to here, and you can see that price traded right into that imbalance. Good. Price traded right into that imbalance and gave a big drop, right? Then as price was dropping, what did we have? We had price also giving us another form of imbalance right here. So we had this imbalance. I think, let me draw it well. Good. So we had price trading into the imbalance. So you can see that price almost completely filled this particular imbalance, right? Then after that, what did we have? We had a drop. But then once price was moving up to fill this imbalance, you can even see from here, once price was moving up to fill this imbalance, what did we get? We got price was creating another form of imbalance right here, from here to the side. Then what did price do? Price went up, traded into the zone, came back to to fill the imbalance, went up again. Once price was going up, what did we get? We got price creating some form of imbalance in the market, right? Which is from here to here, and then price came to fill it. Price was coming down, we still had this particular creation of imbalance. So when price is moving, price tends to create this imbalance in the market, just to serve as a pull to it, like a magnet. So price always move towards areas of imbalance, so as to fill it and then continue moving in a direction. So same thing here. What did we have? We have market moving to fill this tiny imbalance. So we had a very tiny imbalance right here. Market came to fill it, traded into this other block right here on a monthly time frame, and then we had price starting to move to the upside. Now once price was moving to the upside, what did we get? We got a very nice imbalance that was formed here. Now price will try every means to try and fill imbalance. If it doesn't fill today, that doesn't mean it won't fill. Probably in the future, it can take years for price to actually fill the imbalance. So let's see something we have here. We had price moving right, price traded into that block. After filling this imbalance, we had price moving this way to fill this imbalance. right? So when price was moving, price created this imbalance. Price created this imbalance. So we have this tiny imbalance that was created. And then what did we have? We had price trading right into it, I think more than 50% of it, and then we started having what? A move to the upside. Now, once moving to the upside, we had price what's creating this form of imbalance right here. I'm going to take it from here to here. Now, what did we have? We had price moving into 50%. Yeah, I think 50% of the what? Of the imbalance. When I take from this high to this particular low here, and then we take what? The 50% of the imbalance, you can see that price traded right into it. After trading right into it, it went up to take out this high. And then what are we having? So right now, from here, we can see that once we took this particular high, once we took out this particular high, we are expecting what? Price to give us somewhat move to the upside, right? Once we took this high, we are expecting a pullback. Now, most of the pullbacks are just what? Movement to actually come and what? Correct that particular what? Imbalance that we have, right? It's just come to what? Fill those imbalance. So once again, we had a pullback. Then market what? Broke structure to the upside. Where is the break of structure? Right here. Market broke structure. After market broke structure, where do we have an imbalance? So we are looking at areas where we have an imbalance. So this is what? An area of imbalance, and then these are potential zones markets what will trade into before continuing moving to the upside. So you see, once price traded into that imbalance, we had a move to the upside. Once price was moving, you can see right here that we had some form of what? Imbalance right here. Price came towards completely fill that imbalance, and then we had price giving us what? Balance what? Movement. Once again, once we got here, we had an imbalance, and then what did price do? Price traded right into that imbalance, and then gave us a move to the upside. Okay. After, what do we have here? We had a break of structure, a break of this particular high here, structure here, right? Then after that break of structure, where do you identify your imbalance? We have an imbalance right here, from here to the side. So what did we have? We have market trading into this imbalance, and then trading into this very nice demand, and then giving us a move to the upside. So as we continue moving to the upside, price what's break structure and tend towards come and fill an imbalance as it continues. Now on the weekly time frame, we are going to see the same thing happening. Now let's look at something here. From this side, we can see that we have a very big imbalance. We have some imbalance here that price didn't fill. But then once price got here too, it's created an imbalance, and then filled that particular imbalance, came down, created an imbalance. I think they didn't fully fill it, just tapped about just 20% of it, which most of the time when price tap 20% of an imbalance, I expect price to come in it later in future and then what? Fill it. So same thing we had right here. Price created this form of imbalance right here, right? So after price created this form of imbalance right here, it came back to fill it, gave us a drop, right? So price broke structure to the downside. So we had a break of structure to the downside. So if bullish market structure, what were you having? We have price moving up, coming down to fill an imbalance. So in a bearish market structure, break of structure to the downside, we are expecting price to go up to fill these imbalances that we have here, right? So we had an imbalance that's from here to here, and then this place. But most of the time, you see price traded right more into it than what we got. So most of the time, that's why when you are trading, you have to look for confirmation before you enter a trade. Now, what did we get? We got another break of structure right here. Good. So once we got a break of structure, where do we have imbalance in the market? We had some imbalance right here. Then we also had an imbalance right here. That market completely filled it. So look at this place. So as I was saying, sometimes you may have price trading into an imbalance and then later coming into it again to completely fill it. So once price created this imbalance, it's traded into it, right? I think about almost 50%, but later came down after So this even happened in 2006, and then later in 2008, 2009, price came to completely fill this particular imbalance. Now let's go to the weekly time frame and see how, if we can find the same thing we are finding right here. So with a weekly time frame, I'm just going to start from here, and then let's see how price actually react to imbalance. So you can see right here, you can see that the same thing, we had some form of imbalance right here, from here to here, right? Because we have these tiny ones, and then later in future, price came to trade to completely fill it before moving up. So this very, very big imbalance here took a very long time on the weekly time frame to fill this imbalance to before we move. So if I am expecting movement in the market, and then price is giving me some move to the downside, where am I going to be expecting price to come to? I am definitely going to expect price to come into this imbalance and give me a move to the upside. So once price gets to this imbalance, and then I see that, okay, this is a very good zone for for buy, then later I scale down to the lower time frame to look for what price is doing here. Do I get a very nice entry? Then I go for an entry. This happens in every time frame. So when you go to the 4 hour, you should be expecting the same thing. You are going to see the same thing happening in the market. Okay, now there was this very nice movement I made mention of in my YouTube channel in one of the analysis. So I was talking about DXY breaking this particular relative equal highs. So let me just say it just took out this relative equal highs. Then after taking that relative equal high, price was moving down. Now why was price moving down? Because of this imbalance here. So once price traded into the imbalance we had right here, what did we do? We had a move to the upside, since we are very, very bullish. So once again, we've had that particular move to the upside, and then where is our next imbalance? This is our next imbalance. So probably this is the imbalance we are going to be expecting price to trade into. All right, so this is just a short video under how to identify imbalance in the market, and then how to actually use it for your buyers. When you go to the daily time frame, let's see about the daily time frame what we also have. All right, so on the daily time frame, as you can see, the same thing. So as price moved to the upside, what do we have? We had price moving to the upside. We had this imbalance. Now you can see that this imbalance wasn't even tapped into, just small, and then price moved to the upside. So probably in future, this place is going to be a very good place to look at. Okay, once price get there, then we had price breaking structure to the upside. Once price broke structure to the upside, we had a move to the downside just to fill up this imbalance. So you can see right here, we have this very tiny imbalance right here that price traded into just to fill this imbalance, right? So price traded to fill this imbalance, and then later we had a move to the upside. Then we had, this is called a volume imbalance. I'm not talking about all the imbalances, right? So I'm just going to mention it. This is called a volume imbalance. Price came into it, traded into this volume imbalance right here, and then we got a move to the upside. So same thing happens on every time frame. So depending on your analysis, where you are looking at, is price bullish, where is price moving to? Price always move towards areas of imbalance. All right, but then one thing is, you need to actually practice to understand. Watching a video alone is not going to help, right? I know most of the times, once you watch imbalance here, you go to another channel to watch an imbalance. You think watching 5 videos will help. No, you can watch 5 videos and you still not understand until you practice it. So I hope you guys practice. I hope you understand. If you have any question, you can leave it in the comment section below. Thank you for watching video. Subscribe, like the video. All the best.